Good afternoon, class. Today we are going to look at tax investigation. Now, our previous lectures we discussed tax audits, and now we are going to look at tax investigation. In this video, we are going to look at what is tax investigation, the objectives of tax investigation, classifications of tax investigation, and distinction between tax audit and tax investigation. In the as we discuss, tax audit has a limited time frame of 6 years, while this tax investigation has no time limitation. No, it can extend over the number of years during which the fraud were committed. So that is the difference between tax audit and tax investigation. Now let's look at meaning of tax investigation. Okay, meaning of tax investigation. Tax investigation is a comprehensive and in-depth examination of books, records, documents, information, and all activities of the taxpayer in order to determine the truth of a matter. And this is carried out by a tax authority in order to recover the uncharged or unpaid. It is undercharged, or underpaid taxes that relate to previous years where the tax authority has credible evidence that the taxpayer has committed fraud. All this is whereby a taxpayer has committed fraud in the past, where the taxpayer refused to pay the tax as at when due, or refused to even file that tax completely, or did not file what is supposed to file. So then the tax investigation will now come in, and the tax investigation is just a process of recovering the taxes that it should have been paid. That is all about the meaning of tax investigation. Then the objectives of the tax investigation. Objectives of the tax investigation. One is to detect the tax fraud and other breaches of the tax laws. It is one to detect tax fraud and other breach of tax law. A situation whereby the taxpayer breach a certain tax law, then the tax authority will have to come in to investigate that issue. Number two, to identify and apply the penalties. So to apply the penalties. Once the tax authority discovered and confirmed that this taxpayer has breached certain the relevant tax laws, that he ought to comply with, then he has to pay penalties for that. So it's the tax investigation that will now identify the offense and also apply the penalties as imposed by law of sections of the tax law. Number 3 is to trace and locate the offender. To trace and locate the offender. Is to trace and locate the offender. In this situation, is where it's not only the company that will be penalized, even the employee that committed that has to face the law. So they have to trace that person. Number 4, they have to provide sufficient evidence. So this tax investigation will assist the tax authority in providing sufficient evidence of the breach. Then number 5, it identifies cases involving tax fraud and obtain evidence of possible prosecution of the culprits. That is prosecution of the culprits. So that is these are some of the objectives of tax investigation. Then we are now going to look at classification. The classifications of this tax investigation. The tax investigation is divided into 2. We have criminal and civil investigations. Have civil investigation and criminal investigations. So these are the 2 types of tax investigation we have. What is this criminal investigation? Criminal investigations is whereby companies are investigated if any of the issues occur. 1, that is under this, when 1, there is criminal violation of tax law, the firm or the taxpayer refuse to comply with the tax law. It's a criminal act. Where there is you are suspecting the taxpayer of a tax fraud and or neglect of taxpayer, evidence of willful defaults, it will now trigger tax investigation. And what are the points that will now trigger that tax investigation? 1, we have under that we have a refusal of files of returns. So in a situation whereby the taxpayer refused to file his return, so there is that taxpayer is already violating the relevant tax laws. Then number 2, refusal to remit withholding tax and value added tax deducted at source. This withholding tax and VAT. You deducted this money at source, but you refuse to remit it, which means something is going on. So it will now invite tax investigation. Then the refusal to allow access to records and books. Records and books. So whenever taxpayer refuse to allow tax authority to have access to their records or books, which means something is going on, so they now have to conduct tax investigation. Then petition against the company disclosing serious tax fraud. Petition. When there is petition against that company, then it's also inviting tax investigation. When there is overstatement of income, overstatement of income, then fictitious assets, and expenses. All this will now invite now cause tax investigation. We have civil. The second one is civil investigation. This civil investigation focus on abusive tax avoidance schemes. This is also emphasized on evidence of artificial transactions. This is whereby there is a law that allow you to just minimize or to plan your tax, but you are abusing that law. You are bringing transactions that did not exist, did not occur into your books. And at the end of the day, the tax authority discover that what will happen, they have to now come and investigate that. So that is civil investigation. And what now cause all this? There is one, there are referral from law enforcement agencies. Referral. Then there is media reports. Now that is even the age of social network. Poor tax ratio. Then incorporation in tax haven. Tax havens. So these are some of the reasons for civil investigation. Then now we are going to look at the distinction between the tax audit and the tax investigation. This is our tax audit. This is tax investigation. One, the tax audit is a routine exercise. It's a routine exercise. That is tax audit. While the tax investigation is usually triggered by fraud or other forms of suspicious activities. Fraud or suspicion actions of then number two, we have the tax audit is not 100% vouching. It's not 100%. So when you want to carry out tax audit, you are not going to examine their transactions 100%. Just pick sample while the tax investigation is more intensive because of the need to gather sufficient evidence. So this one is can say 100%. You have to investigate everything. That is tax investigation. Number 3 is the tax audit has essentially tax recovery as the outcome. The outcome of this is tax recovery, while the tax investigation has the tax recovery as the outcome. Tax investigation has prosecutions and as expected outcome. It's not only to recover the tax, but you now have to prosecute prosecution. You now have to prosecute the people involved in that act. Then number 4, there is a materiality concept in tax audit, while in tax investigation there is no materiality concept. Here there is no materiality concept. 5, the tax audit has a statute bar, while the tax investigation does not. That is, the tax audit has a limit of 6 years, while in under tax investigation does not have any limit. Okay, thank you so much, and we are going to stop here. Thank you for your time.